For more on the Intel quarter, let's bring in Fast Money friend, Gene Munster. He's the managing partner at Deepwater Asset Management. Gene, great to have you with us.
Hi, Melissa.
What'd you make of the, the stock is up 47% this year, and it's January 22nd. So, this pullback is minor, but what did you make of this quarter? And is the stock appropriately valued here?
So at the most basic level, Intel is a meme stock. They're going to grow 3% next year. NVIDIA, which it's kind of a comp, is going to grow, my guess is 65%. The street's at 50%. And so when you look at this 100% move in the stock, it's because there's been some massive endorsements with the U.S. government, SoftBank putting $2 billion in, NVIDIA putting in $5 billion to try to get some sort of an edge and an angle on what's going on the mobile side of AI and to get some learnings and potentially some distribution around that side. And so this is a stock that has gotten life because it's had some big endorsements and also has this hope that they're going to catch lightning in a bottle. And the reason why I wanted to start there with the meme side of this is, I don't know what the stock is going to do. My sense is it goes lower. It goes, if you're going to just look at the fundamentals here, it should be down like 15% right now. But that's not the case. And I think it's part because of this meme stock side. So how do I think about the quarter? The very basic is that they needed to show that, especially on the guide, that they're going to guide higher, that we're starting to see an improvement. You've outlined about the customer. We didn't see any of that. And so this is still a 3% growing turnaround story when the rest of the competition is going like exponentially faster around them.
There was some hope going into the quarter. Maybe this helped fuel this meme-ish type of rally that Apple would be a customer for 18A, that Apple actually bought a process design kit for 18A, which may indicate that they're closer to becoming a customer. Does that make sense from your standpoint in terms of Apple using this technology?
Yeah, they could. They're still going to, they use foundries. Apple's a big customer of TSMC, and so, they go to other places. But they're going to want some of the most advanced foundries. And what I understand after this quarter is that, their work, Intel's work about building those most advanced foundries are still going to be somewhat limited until they get more customers signed up. And so there's a little bit of a chicken and the egg. They got to get Apple signed up, but does Apple want to sign up without the clear infrastructure? So I want to be clear is that Apple could become a foundry customer of Intel. That's definitely on the board here, but it still doesn't change kind of the fundamental scope of their business. And that fundamentally is that even though CPUs have a place, that the most exciting, the most value, the fastest growing part of this whole AI infrastructure piece is going to be on the GPU side, and they still don't have much there.
So, Gene, then drop us back into the earlier part of our conversation, which you may have been listening to, but either way, you're such a Fast Money regular and as an investor, you think not only about valuations and bottom up, you think about the dynamics around the sector you're investing in. And Karen was saying, why wouldn't they be sellers? Maybe we were all kind of saying that. The bottom line is semiconductors continue to outperform as a group. We've seen rotation within that group. I'm just kind of curious to get your take here on why the market has rewarded Intel, why the market has rewarded memory so much in the context of what is still an extremely commoditized business. Semiconductors are up 12% year to date. The rest of the market, I mean the S&P, I even mean the NASDAQ, is flat. And that tells me that people still feel like, at least they did up until today, that they want to own semis, and that includes Intel.
So there's a piece to this, like a bigger part of the conversation, which is like what's driving all this. And there's a question, there's a focus has been largely on training when we think about anything CPU related, GPU related, any infrastructure related. It's been most of the buy side and sell side conversation has been around training. Inference is going to be a lot bigger. When I say a lot bigger, and this is going to sound crazy, but it could be hundreds of thousands of times bigger than what we're seeing in terms of the infrastructure spend on training. That's probably for a different day to go into that. But I do believe that the market is starting to recognize like that this whether it's through memory or through some of the infrastructure side is going to be growing faster for longer. And I think we're starting to see some of that. Intel has gotten caught up in that because it's the rising tide. But I think the substance of what's going on in their business is this is still a show me story.